Okay, it is time to start. Thank you everyone for joining us today. This is Ivy, your current speaker, Ivy Baca, and Eric Tran will be the presenters today for Universal Commercial Capital. Please, if you guys have questions, please write them down on your right-hand side of the screen. We will be very happy to answer all of them at the end of this webinar. Okay.
Okay, hello everyone. Thank you for joining our webinar. My name is Eric. With me is Ivy. Today we will talk about Fannie Mae and Freddie Mac apartment loan program. As all of us know, we are very familiar with like Fannie Mae, Freddie Mac 124 unit program, DULP. Today we're gonna talk about their 5+ apartment loan program. With that being said, I want to hand over the microphone to Ivy to go over each point. Okay, Ivy, please.
Okay, thank you, Eric. Yes, we're going to discuss about Fannie and Freddie apartment loan program. We're not going to get too deep into it, but we're going to talk the basics, and any questions that you guys have, you can, again, ask them on the right-hand side of your screen, and we will answer all of them at the end of this webinar. Okay. The main points that we're going to discuss today will be the eligible properties, the geographic qualification, the minimum and maximum loan amount, the LTV, the credit qualification, and the income qualification. Eligible properties, they will be multifamily housing with 5 residential, 5 units or more. Ineligible properties, more likely they don't qualify, will be for senior housing or student housing, military housing. These are the 3 major ones that they don't qualify. Now, in regards to occupancy, we do they do need to be at least 90% physical occupancy for the trailing 3 months average prior to underwriting, or it could be 85% physical occupancy for the trailing 3 months average prior to underwriting if the subject property has any of the following characteristics. Now, the property is recently built or renovated on top market, or the property it's 30 units plus. This program is nationwide. All top markets will include Denver, Connecticut, Miami, Lauderdale, Palm Beach, Minneapolis, Portland, Seattle, Washington, New York, New Jersey, and so on, as you see here on our list. There is top markets. Top markets do qualify a lot faster. The loan amount really depends. The minimum loan amount is 1 million. We can go up to 6 million on all markets, but for above 6 millions, it does need to be on top market or standard. For LTV, the highest LTV that we can do for acquisitions will be 75% LTV. We can go up to 80% for top markets or standard markets, as long as the DCR is a 1.2 or 1.25. Now, for small markets or very small markets, our top or maximum LTV will be only considered at 70% LTV with 1.3 and 1.4 DCRing. Now, this program is for acquisition or refinance, whichever of the two. The terms can vary. The minimum term is 5 years, fixed period. This will be a fixed rate. 5, 7, or 10-year fixed rate. Now, this is a program that is amortized over 30 years, and the rates can vary. They can start at 5% or above. It really depends on the markets. Again, it could be top markets, they could get a better rate. The prepayment penalties are declining schedules and yield maintenance available for all loan types. It can really depend on what type of loan we're looking at, if it's an acquisition or if it's a refinance. And also, again, we are definitely considering the market. If it's top market, low market, it really depends. The minimum FICO required is 650. Now, the eligible borrowers and borrower entities, up to 6 million individuals who are U.S. citizen, limited partnerships, limited liability companies, single assets entities, special purpose entity, Tennessee in common, with up to 5 unrelated members and trusts, irrevocable trust, and irrevocable trust with individual's guarantor. Now, between 6 million and 7.5 million, these are single assets entities. These are all non-recourse. There's no subordination permitted. And for income qualification, the net worth needs to equal the loan amount. Liquidity equals to 9 months of principal interest. Now, in order for you guys to submit your loan scenario to us or discuss it, we can also you can also feel free to call us, and we will discuss your loan scenario over the phone and tell you immediately if this will be something that's fitable to Fannie and Freddie Mac program. The first things that we do need to review is the current rent roll, the trailing 12 months rent collections, the 3-year historical operating statements up to date, year to date, and a brief description of the property. We need to know the location, the number of units, the year built, what type of amenities they have. The best to do is have pictures of the property, or if you had an appraisal or an old appraisal due to the property, then we can also use that for property description. And we also need to know the loan request or the loan requested that you need. We also need personal financial statement for the sponsor, just to verify liquidity. And with that being said, we can definitely take a look at your loan scenarios and give you a right away answer if you do qualify or not. Now, just remember, DCRing is the main thing here, so we do need to verify that the property is DCRing at least 1.2 minimum. Okay, so if you guys have questions, I will let Eric now discuss a little bit more, and you can put your questions on the right-hand corner so we can answer them.
Okay, before we answer any question, I want to point out one main thing about this Fannie Mae and Freddie Mac loan program, which attract a large supply potential clients. First thing first, this program does not require either a business or personal bank statement. We just need a rental, the rental history to determine the DCSR, but we don't need any personal tax return, to determine the global underwriting. Secondly, this loan is non-recourse, which is very beneficial to a lot of borrowers, especially in Texas, because in Texas, all loans are recourse. Non-recourse, just in case you don't know what it is, it means your ability only lies with the property. Lender cannot touch any other of your asset if the property go into foreclosure. That is a two main attractive element of this loan program. No tax return and non-recourse. Okay, so if you have any questions, please do post it up.
I don't see any questions yet.
Mhm.
Do you see any questions on your end, Eric?
Not yet. So while we are waiting for the questions, another thing I want to point out is there are 4 tiers in this loan program. Top tier, standard, uh, low, small tier, and very small tier. Top tier, obviously, major metropolitan cities, which we listed um, on our program. Standard tier, more or less suburban cities, small tier and very small tier in the out there the remote area with population around 50,000 or less. Mhm.
Mm-hmm. Yes, and Eric just mentioned about the tiers, and I just put the top markets that include the cities on here, so you guys can take a note of that.
Mm-hmm. Okay, I saw one question. Please explain traveling. Traveling mean historical. What is a rental income before, 12 months before, 24 months before, up till now? Mhm. So in a sense, we're gonna look at like the history of the rental income received because a lot of time broker gave it to us the rental income, but it's only happened last month or last 2 months when they raised the loan amount. We take it into consideration, but we always go back to like 12 months before, 24 months before to have a better picture of the overall rental history.
Hello, this is Sergio from Universal Commercial Capital. I'll join in here because for some reason the GoToWebinar doesn't show the questions really clearly. There's a lot of questions here. Would a client with less than 650 score be considered if they have experience? That's one of the questions, Eric. Can you answer?
No exception. 650 is a minimum FICO score. As you know, Fannie Mae and Freddie Mac is very strict on their minimum FICO score requirement.
Okay, I'll go back because there's a lot of questions one by one because for some reason GoToWebinar has something is on their end. There's a lot of questions, so I'll go one by one. Net worth entities equal loan amount. Individual 50% of the loan amount, for an entity 2 times the loan amount. That's the question.
Okay, the net worth and the net worth requirement is your net worth, which include both liquid and non-liquid, excluding the primary residence, has to be equal to the loan amount. So in a sense, your minimum net worth has to be 1 million because that is a minimum loan amount. It can be real estate, it can be stock and bond, cash, but we don't count your primary residence in real estate.
Okay, the next one is from Michelle. Why is this loan more competitive than other commercial loans?
Because it's Fannie Mae and Freddie Mac.
Michelle asks us again, is the fixed rate only 5 years?
3 category, 5, 7, and 10. But the amortization can be either 30 years or 25 years. But Fannie and Freddie do not offer anything more than 10 years, 5, 7, and 10, amortized over 30 years.
Dawn is next. She's asking, did you say no tax returns?
No tax return required. And that is the main attraction of this loan program. If you go to like a bank like Wells Fargo and Chase, the basic requirement is 3 years BZ and personal tax return. This program does not require tax return. But like we do look at the rental income to calculate the DCSR. DCSR means debt coverage service ratio. That means the income, the rental income received versus the principal and interest, mortgage payment.
Okay, the next
We
one
should
is
also
again.
point out, I'm
Go
so
ahead.
sorry, Sergio. We should
Go ahead.
also point out, Eric, in regards to the deposit once the loan is pre-approved. there is a deposit or not a deposit required.
You know what? Once the loan is pre-approved, in a sense approved already, we always require a deposit, for third-party services such as engineering, appraisal. How much is it? It can range from 7,000 to 10,000.
Another one, please explain
Okay.
trailing residential realtor learning.
Oh yeah, I answered that question already.
Okay.
Trailing historical. Yeah.
Okay. Can the term be extended?
No, the term cannot be extended. 5, 7, and 10.
What are our charges and fees?
As a lender, we are at par, and broker can charge whatever point they want, 1 or 2 points. However, there is no rebate in these programs.
Ben is asking, no income?
No personal income, but we do take into consideration the property rental income. That is the main thing we look at. But we don't look at the personal income. For personal income in the banking terminology, we call it global underwriting. We don't do global underwriting for this program.
Next one. Also, what do you mean DCRing?
Well, say that again, Sergio.
What do you mean DCRing? What do you mean by DCRing?
DCR mean debt coverage ratio. That means you take the rental income and you divide the mortgage payment plus tax, insurance, and association, and it cannot be lower than, at the lowest, 1.15. But normally, the DCR is 1.25. Rental income divided by mortgage payment plus tax and insurance.
From Jason,
That's
what
how we
form?
qualify loan. Yeah, go ahead, Sergio.
Yeah, from Jason, it says, what form of PFS will be required?
The personal financial statement, look at the asset requirement. The asset requirement equal the loan amount. That is the first thing we will look in the personal financial statement. Secondly, liquid asset. You got to have 9 months PITI as a reserve in the bank account. So that is the 2 key requirements for this loan program.
From Michelle again, how long is the process?
The process can take around 45 to 60 days. I never close any loan sooner than 40 days for this program. Because after we approve it, we have to send it to Fannie and Freddie to reapprove it again, before we can fund. So let's say minimum 40 days.
From Randy, can you again list personal info needed from buyers other than FICO score?
We will need 2-month bank statement, the personal financial statement, and any supporting document for their asset, such as stock and bond certificate, schedule real estate owned. Yeah, go ahead, Sergio.
From Bill, would a client with less than 650 score be considered if they have experience?
No, 650 is a minimum FICO score, no exception.
Well, he said 650.
650.
Yeah, 650.
Okay,
and
then this program, since it's not a fix and flip program, we require 90% occupancy 3 months before closing. That means this program is only for stabilized property. So we don't take experience into consideration that much. This is for like the regular, stabilized, not in transition property. One key requirement, please remember, occupancy has to be minimum 90%, 3 months before closing. A lot of brokers come to us, with a property, the project, like 50 or 60% occupancy is a no. Has to be minimum 90%. In a sense, it's a fully occupied, No problem, no defer maintenance property. Fannie and Freddie look at like no problem property.
Uh, and we might have soon a webinar on fix and flip as well. Next question is for Moran. He's asking, will we get a copy of the PowerPoint? Yes, you will. We'll send a PowerPoint. We'll send a recording of this video as well. The next one is from Carol. She's asking, what are fees, costs?
Okay, like I say, we are at par. Broker can charge 1 point, 2 point. It depends on the agreement between them and the client. Third-party fees around $10,000, which include appraisal, engineering, underwriting, attorney fee. Remember, in this Fannie Mae Freddie Mac apartment loan program, there are two fees that we don't really have in residential program. The first one is an engineering report beside the appraisal report. Engineering report is more or less like home inspection report in the residential 1 to 4 unit space. And the attorney fee. Attorney fee in this program is more or less like a loan doc fee. Once again, in the 1 to 4 residential loan. So I would say the third party fee would range from $7,000 to $10,000.
Okay, from Ben. No tax return, but you need to show net worth of 1 million.
Net worth has to be equal to the loan amount. So if the loan amount is 2 million, you need to show 2 million net worth. Correct. We don't need tax return. We don't need to see the borrower's personal income, but we require they have an asset, and how much we require has to be equal to the loan amount. If you borrow 6 million, your asset has to be 6 million, which include both liquid and non-liquid. Stock, bond, cash, real estate. Once again, we do not count the primary residence as asset.
Everybody else asking for the handouts? Yes, we'll send this PowerPoint presentation to your emails, and we'll send the video as well. Next one is Jason. Jason, I'm sorry, the question is very long, and for some reason the GoToWebinar is having a problem, technical issues. But I'll read it. What does 5-year and 30-year amortization mean? What happens after 5 years? Do you need to refinance at a time? So, what happens after 5 years and after 30 years, Eric?
Okay, in a sense, 5 years amortized over 30 years mean we calculate the monthly payment on 30 years. That's what we call amortization. 5 years means what? 5 years means the loan is fixed. It's amortized over 30 years, but we only allow you to keep the loan for 5 years. After 5 years, you have to pay the loan back, either by selling the property or refinancing. In a sense, 5 years means you cannot keep the loan longer than 5 years. You have to pay the lender back after 5 years. Amortization 30 years means, but we calculate the payment over 30 years. Okay, next question.
The next one is, what is the debt service requirement?
Normally 1.25. For top tier market, well, we can go with 1.15. Top tier means top market. San Francisco, New York. Yeah, go ahead, Sergio.
The next one is, what is interest rates?
The interest rate can range from 4.5 to 5.5, depend on the tier. Like I said before, there are 4 tiers in this loan program. Top tier, standard, small tier, and very small tier. Top tier, right now it's about 4.75 interest rate, fixed 30 years, doing 5. For standard, I would say 5%. For like small and very, very small, I would say about 5.5%. Fixed rate, once again, 30 years doing 5. For 7 years or 10 years, you add about 0.375% on top of the 5 years term rate.
Next one is from Andrew. It says property types.
Property type 5 unit and up. You can have a mixed use like commercial on the ground floor, but the commercial part cannot be more than 30% of the total square footage. So in a sense, 5 unit up only. And certain property we don't do per IV presentation, senior housing, student housing, apartment complex with a rental limit agreement with the city. We don't touch those. Mhm. Property with septic tank, no. Mhm. We don't do those. So more or less, it's apartment complex to make things simple.
Okay, the next one is from Mehedi. Sorry if I don't pronounce your name right. Can you do Fannie and Freddie cash out?
Yes, as long as the LTV is there, you can do cash out, non-cash out.
Next one is who does your servicing?
Servicing, we have our own servicing company.
Next one is where can I find more information on the 1 to 4 program? We can send it to your email. Ted, we can send it, Ted Fields, Ivy, if you can just note that down, you can give him a call or send him a flyer with more information on that.
Sure.
Who orders appraisals?
We order appraisal. Mm-hmm.
Raymond,
appraisal go with the engineering report. So for this like commercial loan program, 500+ units, normally the appraiser and the engineer gonna go to the property together.
the next one is down payment required. Raymond is asking, is down payment required?
If the DCSR is there and it's a top tier market, the minimum down payment required is 20%. But I rarely see, any property qualified with the rental income at 80% LTV. To be on the safe side, I would say 25% down payment minimum, even though Fannie and Freddie can go up to like 80% LTV.
Okay, next one is Freddie and Fannie does allow yield spread. Why do you guys not allow it?
Because it's not in our policy. We don't
Okay.
know whether Fannie or Freddie allow it, but we don't have yield spread at all. And that's one thing that I want to make very clear to everyone. No yield spread.
Carol is asking, phase 1 environment report required?
No, because it's apartment complex, so we don't require a phase 1 report, but we always require the engineering report. Engineering report means more or less home inspection report in the residential space.
Ben is asking what type of asset?
Like I say, could be real estate and non-real estate. For real estate, we do not count residents.
The next one, is the subject included in assets?
No, subject property is not included in asset.
Is business asset considered?
Yes, it is considered.
Can the 6 million be combined between all investors and will all be required to be on the loan?
Likely, that's more or less on the legal side. And we cannot say for sure until we see all the paperwork, but very likely.
Is the loan a balloon or a ARM?
It is a balloon loan, 30 years due in 5. That means after 5 years, you have to pay the loan off. Or it's a hybrid ARM, which means after 5 years, you don't have to pay the loan off, but the loan will change into the adjustable rate loan.
Can you explain the prepay penalty? Would I be permitted to pay extra on the loan?
The prepay penalty is step down, 5, 4, 3, 2, 1 on each year. And the term we call the prepay is a yield maintenance. But on the safe side, if you pay up early than 5 years, be prepared to pay penalty 5% of loan amount. And it cannot be like buy out. You cannot buy out the prepay. You can negotiate in the beginning on the rate, to have a step down prepay. Like I say, step down prepay mean, the prepay decrease with each year goes by.
The next one is, so Universal will refinance it after 5 to 7 year fixed.
Can you say that again, Sergio?
Yes. Raymond is asking, so Universal, meaning us, will refinance it after 5 to 7 year fixed.
Yeah, we will. Or they can go to any other lending institution for the refinance. But normally our client, our broker come back to us after 5 years for a refinance. But they have a choice out there. There is a plenty of lenders out there who would be more than happy to refinance for the client.
Anthony is asking, what is appraisal cost average?
Averagely about $3,000 because it's apartment complex, 5 unit and up. So nothing is lower than $3,000.
Next one is, what is the minimum down payment required?
20%.
20%. Okay. I just want to quickly apologize to everybody who couldn't attend. For some reason, GoToWebinar is having a problem. We're using the best software there is, but they had a problem. Few people couldn't connect. They're sending us emails. We're going to send you this recording. You'll hear it in the recording as well, and we'll send the PDF to everybody here in the. We got a thank you. No problem. Can you repeat that? Hard prepay or soft?
For this program, we can safely say it's a hard prepay. Like I say, 5% of the amount owned if you pay off early.
If you, Universal, will refinance it, will it amortize it for another 30 years at the new rate?
It depends. We cannot say for sure for things like 5 years down the road. But normally in commercial lending, you rarely see any straight 30 or 15 loan program. In commercial loan program, normally it's balloon or hybrid ARM 5710. Some lenders, such as Wells Fargo or Chase, they can offer like 15, but like there is no like 30. So keep in mind, in commercial loan, it's always short term, 5, 7, or 10 years. You don't see a straight 30 years loan term 30 like you see in the residential loan. Go ahead, Sergio.
Yes, well, there's no more questions. I do apologize for technical issues. It was not on our side. I'm just checking. We'll send the recordings to everybody. From Ron, he says, thanks, Eric. Very good information. If you guys have any other questions, feel free to ask. We'll be here for a few more minutes. Ask anything you guys want to know. We do have more webinars upcoming, fix and flip, probably. Eric, do you have any ideas on the next webinar?
I think it's going to be in October. We are thinking about either the fix and flip webinar or a loan for foreign national webinar. But either program is very educational to brokers. We will make an announcement.
Can we finance individual condos owned by one entity?
Not under this program. This program requires 5 units minimum and up. So for one condo, I think he or she was asking about Fannie and Freddie residential program, 1 to 4 units, the DU and the LP program.
Okay.
Okay, I just posted the last PowerPoint here for you guys to take in our contact information, our phone
24
number,
units,
telephone
sir?
number.
I'm sorry, Anthony
You know
just
what?
asked
I received like quite a few emails from brokers that they cannot join the webinar. I don't know why, but I really apologize to whoever cannot join the webinar. Sergio, take a look because I received like 20 emails from people.
I know. I know I've seen that as well. I don't know why, and I'm gonna go back to go to webinar with this. There is
Make
a problem
sure
from there.
make sure you send the recording, this recording
Mhm.
webinar to those people. First thing
Of
first.
course,
Okay?
of
Yeah. Once again, everyone.
Anthony asked, can we finance individual condos? But after that, he asked for 24 units. So I'm guessing the question is the same. It's a addition to the first question. Can you finance individual condos owned by one entity, and then says 24 units?
Yes. Uh-huh. Yes. The
So under
only
this
the
program,
only
we can do 24
restriction,
units.
yeah, the only restriction we have is if loan amount is 6 mils and above, but under 7.5 mil, we have to do the single entity. Single entity, that means the LLC can only be used to purchase that property. But like for 24 units, it fall under a regular Fannie and Freddie program. I don't see anything undoable with that.
Okay, do you guys have any more questions? Go ahead,
Okay.
Ivy.
Yes, thank you everyone for joining us today. I have just put the PowerPoint there for our contact information, and if you guys want, again, I can put um, the the items that is needed for review, which is these 7 points here, or 6.
Let me go back. There is one more question. Can you? There is a few more questions. I'll answer those with the technical stuff. Can you have a 730 credit score with BK, Eric?
We have a 5-year seasoning for BK, so it cannot be sooner than 5 years.
Thanks for the info. Thanks, Jason. Will you send us the recorded webinar? Yes, we will. Do you cooperate with brokers? Yes, we do. You can just give us a call, or we can give you a call. Ron, we work with brokers all the time, so you're more than welcome to give us a call, and Ivy will go into details on that.
One question, Sergio, are they leaving their email address or their phone numbers to
Well,
contact
yeah,
them?
when they registered, they left us their
Okay.
email addresses. So we'll send the recording of this webinar. We'll send the PowerPoint presentation. We'll send all the information we have. And feel free to always send us email with questions or to give us a call, because that's how it's the best. If you ask, we'll give you all the answers. Next question: Can your assets include retirement accounts for 401k and annuities, Eric?
Yeah, can you repeat the question, Sergio?
Can your assets include retirement accounts for
Yeah, we count.
401k?
Yeah, we do count those as assets.
Okay, so yes, we can.
Yeah, under some circumstance, we might ask to review the 401k paperwork, but like we don't close the door on 401k or annuity as asset.
Okay. Ron, we'll send you an email. We got your email, so we're gonna send you an email, and Ivy can follow up with you as well if you want her to give you a call. That's fine. So I'll just write Ivy to a reminder. And thank you guys we'll send you a recording. You can go over this again. And if you have more questions, we don't stop here. This is just an educational webinar. You can always give us a call, and we'll explain.
Right.
We'll go into details. Also, if you send us your loan scenarios, the loan experts will go over them and give you a really quick answer. What's required, what else is needed. So feel free to call Eric as well. He's always available for anybody. The CEO in our company is available for all of you. So you can just pick up your phone, and his information is right there on the screen, and his cell phone number is on our website as well. So you can give him a call directly and go over the details.
Okay, before we end this webinar, once again, I want to say thank you to everyone about this apartment loan program from Fannie and Freddie. One key word for you to remember: no tax return, and that's very important. Okay, so once again, thanks everyone.
Thank you all.
Yes, thank you everyone. Bye-bye.